Get out now! I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story, it's Wall Street's urgent warning. This is a Trump trade you need to sell now. I'm going to show you why Wall Street is saying you need to dump this and some other trades you need to sell right now. Plus, we're going to show you some incredible trade setups because this is our Sunday show where we like to look at the technicals, momentum, and machine positioning to help you make money in these markets. And speaking of making money, we'd like to welcome Geltec Limited back to our show as today's sponsor. You can find them on the NASDAQ under symbol GELS, and they develop and commercialize gel-based delivery solutions for prescription drugs, nutraceuticals, pet care, and more. And the reason you want to check them out is 5 days ago they entered the early stages of a swing trade, and this is one you don't want to miss out on. You're going to love this chart. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Bloomberg, where we picked today's story up as Trump's plans risk inflating a bullish stock market into a massive bubble as equities now drive to new records. One of their top concerns, they're saying, is extreme bullishness, and there's one sector in particular that Wall Street is saying is getting way too ahead of itself, and based on the fundamentals, you need to dump this trade. But despite all of these risks, investors seem largely unperturbed, with the S&P 500 index setting another record this week. Traders are piling into the riskiest parts of the market too, with small cap Russell 2000 index nearly doubling the S&P's performance over the past 2 weeks and approaching its first record since 2021. And there's a good reason why we see this, is because investors are looking back to 2016, and this is a small cap index. We see what happened as soon as Trump got inaugurated on his first term. The small cap index plunged, and then it took off, and investors right now are betting big that they're going to see a huge small cap rally. But problem is, Wall Street's warning that maybe the second time won't be as good as the first, because one of their top concerns is extreme bullishness, and we're seeing signs of that. We know from history that when investors are too bullish and everyone is in the market, the question is who's going to buy to drive it higher. Well, we're going to answer that question, who's left to buy, but you can see that some 56.4% of consumers now expect equities to be higher in the coming year, and this is off the charts. And speaking of polls, well, we've got some polls for you. I want to know where you think the market is going to be. We've got some great questions for you. We want to know, and hit the link in the description. It takes you to the community tab where you can vote on this and some other issues. We'd like to get some feedback, and while you're there, check out the stock for our sponsor of today's show, Geltec Limited. Again, you can find them on the NASDAQ under symbol GELS, and here is their IPO. The stock pulled back. It hit its support. You see that volume profile line in red, and 5 days ago it entered the early stages of a swing trade, was confirmed a couple days later, and is now looking to retake as high as $3.04 based on our targets and interpreting of this chart. Again, check them out on the NASDAQ under symbol GELS, and be sure to weigh in your opinion on our polls, because small companies are particularly sensitive to monetary policy because they tend to rely on debt financing, and the Federal Reserve has indicated slowing the expected pace of future rate cuts. That may not be an ideal backdrop for small caps, which are considered among the riskiest nooks in the market. In Trader Talk, this seems like a group to date but not to marry, and despite that fact, we've seen money pile into small caps in a big way as investors are betting on a repeat of what they saw happen in the Russell 2000 during President-elect Trump's first term. And people's experience with stock market in Trump's last term is skewing their perception of what to expect in this frothy market. At that time, the market was recovering, and this time valuations are even higher, and we have 2 strong years, and it's risky to assume the market has that same kind of legs. But who could be the buyers? Well, there's 2 remaining buyers. One is the machines. This is why we like to look at them every week. We see the CTAs over the next week. They're not big buyers here in a flat tape, merely 20 billion, and this is global equities, only 925 million to the S&P, but over the next month, 104 billion to buy, only 5 billion in the S&P. You want to know where to position? Well, we're going to see the machines buying foreign equities, not so much U.S. equities, but who is going to be buying U.S. equities? Well, at least for the next 19 days, Well, it's corporates. And here we can see corporate share buybacks go into blackout on December 20th, but right now authorizations are running 19% higher than they were in 2023. Will that remain for next year? Well, we'll see. But with demand slowing and earnings expected to weaken, that means companies aren't going to have as much money to buy their stock back. But will they continue to? Well, we'll find out. But let's take a look at what we see in the market. So we start out with the S&P 500. This is the largest ETF, SPY. Momentum remains positive. Now, how do we know that? Well, we look at a couple technical indicators. One is the relative strength indicator. We want to see it above 40, and it's at 66. We have the MACD, or moving average convergence divergence. It's got a positive cross, but these can create a lot of false signals. So we smooth that out by aggregating these signals and other technical signals together, and we call that our Momentum Timer Pro. We have 17 consecutive daily buy signals on this, but the risk is we're maxed out over a 1, 3, and 6 month window. So when you see a momentum stretch like this, the risk becomes to the downside. So what we want to suggest is if you're long the U.S. equity market here, you need to be controlling your risk. Now, we also look at machine positioning. This is our CTA Timer Pro, where we mimic how the machines are positioned over our fast and slow algorithm. Again, we're max long on machine positioning, we're max long on momentum, and that's one of the reasons we're not on a trade here, because we like to look at trades to buy low and sell high. Upside target, well, the sky's the limit. Downside target 582. Let's take a look at the charts here, and here's the risk you see in the broad U.S. equity market. We see the market has been following this trend line higher. The risk is at some point it's going to pull back, and then investors are going to come in and buy that dip. But if it starts to break down, like we see here during the yen carry trade, the risk becomes squarely to the downside. So in the meantime, while you're long the U.S. equity markets, you need to control your risk. Now, if you're looking for trades, we have two reports, our Momentum Timer Pro and our CTA Timer Pro. You're seeing this data here, and we're going to show you some great trades from We're going to show you some great trade setups from our reports. Hit those links in the description below. Let's take a look at what we see here going on in tech stocks. Momentum also positive. We see the RSI at 59. MACD's got a negative cross. And this is how traders get lost in these markets. They're in and out based on different technical signals, but we smooth that out. Here again, 17 consecutive buy signals, but what we see is momentum stretched alongside. Machine positioning, not max long, but not far off from getting there, suggesting that at some point we could see some selling from the machines. Let's take a look at QQQ here, because we see a very similar setup. It's following this long trend line higher, but again, at some point momentum starts to wane, buyers are all in, and you see it break. So if you're long US tech or long the US mega caps, you need to be watching your risk here. If you see a break of this trend line, you need to get out, because what we're looking at is a potential downside move in the short term to 495. But again, you get a break below there, break below that 200-day moving average. We'll watch out below. But let's talk about small caps here, because that's where we started the show out, where the real risk is. Momentum is positive. You see the RSI is at 66, and MACD's got a positive cross. 18 consecutive daily buy signals, but you notice we're not holding a position here. Again, we don't want to be buying high and try to take it higher. We want to look to buy low, and right now, what do you see? Momentum stretch across all indicators. You see machine positioning long, downside risk to 231.11. Let's take a look at IWM, because this is where money is flowing and in big ways, and you can see investors have taken this higher. But let's zoom in here, because where's the risk? You see here, you gap up, and what happens? Sellers show up, and then over the next 3 days, sellers are there. The downside target is around 231, so we're right down here in the supply zone. But you'll notably every time it gapped up, sellers came in, and then we see retail coming in and buying. The risk for small caps is to the downside. It's sitting near overbought territory on the RSI and the MACD as well, again suggesting from a tactical perspective the market here is too long and too crowded. Again, risk to the downside. Let's take a look at our next screen. This is China large cap. We've been saying this is a position you need to dump. A lot of people jumped in to Chinese equities. Look at the RSI. It's 46. It's right above the cutoff there. MACD's got a negative cross. We've got 15 consecutive daily sell signals. Now, this is a risk here, because we could see a flip in momentum, and that would still not necessarily trigger a buy signal. Let's take a look, because machine positioning has come off a deep short position. We're looking at an upside target target of 32.35, downside target 28.63. But here's something very interesting. We told our subscribers not to take this trade. Let me show you why, because what we're seeing is Chinese equities looking at a cliff. Because one thing we do is we review all of our trade recommendations that our reports have for all our subscribers every day. And what are we seeing? We have a cross here of this red line. That's a 21-day moving average. And then it kind of gapped up and got some excitement there around the election, but it pulled back. It's following the 21-day down. Now, this is a bearish signal. So what we'd expect here is a rally into the 21-day moving average and rejection there. That would support the continued downside move in Chinese equities. We look for a break of that horizontal line, and that would send us all the way down, then targeting the 200-day moving average and the volume support at 26.51. That's why we're telling our subscribers this is a trade you want to avoid. Let's talk about the bond market here. We're going to see some machine buying here in a big way. We look at Metre. They run a fast algorithm. They're looking at over 111.40 to buy. Well, Friday's close at 111.02. This is on the 10-year. Here we can see momentum is positive on the U.S. Treasury long bond ETF TLT. We added a position to our subscribers on November 27th. That dropped our cost basis down about 4 cents, and that trade has turned from a negative to a positive. Now, again, we talk about trading with stop losses here, but let's say you don't and you get upside down on a trade, just use the signals that we generate and dollar cost average back in. And then when you're ready to get out, you can do that. This case, we're looking to ride this higher. Upside target been revised up to 95.18. Downside target just below 92. Machines on the fast algorithm are long, but what we're interested in is really on the slow algorithm where more money is traded. They're starting to see some buy signals here. Momentum is now 8 consecutive days. Let's take a look at this chart here because we see some opportunity in TLT, and there you have it. It's taking off. It got above that 6-month volume profile, which is very critical because what that tells you is sellers were below that. But what we noted, there was a lot of volume here. This is what we told our subscribers. We said hang tight, and then we gave them the green light a little bit later. Let's zoom out to the 1 year, and here you can see the 1 year volume profile now acting as a little bit of resistance. But if you break that, you're looking to rally back up here into the low 100s. Let's zoom out to the 2 year chart. What do we see? Right there, the 2 year volume profile. So you can see long bond here at an inflection point that if this breaks through that 1 and 2 year volume profiles, could send the long bond up. It would be a fantastic trade. So you look at the difference here in terms of trading the broad equity market. You see here from a technical perspective, the bond market looks a whole lot better. Let's zoom in, and what do we see on the RSI and the MACD? You see rising momentum. This is beautiful, and that means the machines are going to be buying, coming out of short positions, and all these people that were short the bond market are going to be forced to buy. All right, let's take a look at gold here. This is one of our poll questions. I want to know where you think gold is going. Momentum is positive. The RSI is at 51. The MACD's got a positive cross. We have one daily buy signal. Now, we put a buy it open back on this on November 21st from our CTA time report. That trade now up 0.3%. This is our live stop loss levels we give to our subscribers. Upside target back to the recent all-time high. Downside target revised to 237.44. We see machines here backed off their long position and looked like they could be buyers here as momentum flips and turns price up. Again, want to know where you think gold can go? Weigh in those polls. And while you're there, check out, of course, our sponsor for today's show, Geltech Limited on the NASDAQ under symbol GELS. I'm going to show you that swing trade setup here in a bit, and it is awesome. All right, let's take a look at gold. And what do we see? It's sitting right at its 6-month volume profile. It's looking to catch back up to that trend line. Let's zoom out here. Here's the trend that gold has been following, and this sometimes is what's called a bear trap. So it breaks a trend line. Everybody starts to get short, thinking the long trade is over, and buyers come in and they flush those short positions up. It hits the trend line. It pulled back to the 9-day moving average. Now let's zoom in. It's sitting again right at the 6-month volume profile. If buyers step back in here, it then could easily get back up to its all-time high. But again, I want to know what you think. Weigh in the comments, weigh in the polls. All right, let's take a look at our next trade setup. That was a good one. We also have GDX, and what do we see? Back on the 22nd of last month, CTA flagged that trade currently down 2.11%. We think that's going to turn around in a big way. Momentum Time Pro subscribers picked it up on the 25th. They're up 1.83%. And what did we see that triggered this? We came off a sell max here, and that triggered these buy signals. That's how we knew from momentum perspective it was a signal to buy. Machine positioning came off a short position, then the market pulled back. Let's take a look at GDX here because there is another great setup. If you think gold's going up, well, the miners are your opportunity. It's sitting right at its 6-month volume profile. Now let's zoom out to the 1 year and see where that's at. It's well below. So we know the buyers have been following this trend line up. Potential bear trap here as well. But if this thing breaks through its 6-month volume profile and starts to rally up, what you could see is a return to 41 would be our base target here, and then back to the recent 6-month high, creating a potentially great trade setup as we come off of oversold territory. Let's take a look at another trade. This is wood. That's right, lumber. As we look at momentum being positive, RSI's at 54, positive cross on the MACD. We have 6 consecutive daily buy signals, and we have a CTA time pro triggered a buy on the 22nd. That trades up 2.61. Momentum time pro up 0.3. And yes, that is exactly how easy it is to trade. We give you the signals, we give you stop losses. Now, I didn't put the stop loss on here. That was my omission, but here's the best part. You get 30-day free trial on our reports while you're there. Check out Geltec Limited on the NASDAQ under symbol GELS. This is a very simple trade setup. We have momentum shifting here. That's what triggered the buy signal. Machines are buying here. Upside target 85.55. Let's take a look. Downside target about 80. Let's take a look at what's going on with wood, and what do we see? It came down here and found buyers and then rallied up. It's now finding support on a 6-month volume profile. This thing's got some legs. It could get up here to 85.55. Downside target right around 79.23. This is again a fantastic trade coming off of momentum. But another fantastic trade setup we see for you is the stock for our sponsor for today's show, Geltec Limited. Again, you can find them on the NASDAQ under symbol GELS. Everything you need to know in the pinned comment and description below. Let's take a look at what's going on with them and that incredible trade setup that's come after their IPO. And they have a breakthrough oil, drug, and nutrient delivery system. It's flexible, effective, and targeted solution. Their proprietary gel technology has been designed to make oral drug delivery accessible to more people for more conditions and settings. The Geltec platform optimizes the benefits of oral delivery while solving the existing limitations of other delivery systems. And the evolution of oral drug and nutrient delivery systems has started out with liquid, then pills and capsules, and the next evolution is Geltec's groundbreaking technology. And they believe their revolutionary gel platform represents a genuine leap forward in oral delivery. Their patented technology allows them to convert existing orally delivered compounds and transform them into a gel-based format. The gel platform can easily deliver macro and micronutrients to humans and animals and can simultaneously integrate both water and lipid-soluble elements. Geltec's dedicated team of pharmaceutical scientists, dietitians, and formulation experts continue to work with partners from academic, pharmaceutical, and commercial industries to further extend their capabilities of our gel technology. And their technology has been created and developed by our internal team in collaboration with Australia's Monash University, who's ranked #1 in the world in pharmaceutical science. The gel's unique formulation and composition provides a chemically and physically stable matrix which can integrate water-soluble components, non-water-soluble lipids, and lipid-soluble components, or any combination of these. And when we look at how it works in the body, it creates a therapeutic experience. It enhances digestion. It's got GIT absorption, a pleasant mouthfeel, and comfortable swallowing. And compared to its competitors, well, there is no comparison. Geltec checks off every box where others just can't compete. And they recently announced 400,000 units have entered production in November of 2024. These units will fulfill orders made for clients in the US and Australia. Delivery is expected in January 2025 for sales across 2 countries as well as in the UAE and in Asia. The production run includes Geltec nutraceutical products in the area of sports, anti-aging, and weight loss. The CEO said their recent IPO was undertaken to provide the necessary capital and awareness of our technology to commence larger scale sales whilst balancing our research and development activities. To see such volumes entering production so soon after the IPO is a testament to our team executing our plans together with market validation on our gel-based technology. This production run demonstrates our ability to sell our products to end users across the world and our ability to begin delivering revenues in the near term. Earlier this year, we strengthened our partnership with Monash Innovation Labs, which allows us to effectively scale and meet our client needs while ensuring the quality of products. The orders connected to this production run are substantial, and we believe that they represent the start of even larger volume orders to come. This from the co-founder and executive chairman. Let's talk about the charts, because after the IPO, you see the stock pulled back and ran right into support. Buyers stepped in here just above $1.46, and you can see the volume profile line. So it's very clear that buyers stepped in here, and now the stock took off. Now, a swing trade, that occurs when you get a positive cross on a rising 9-day moving average. So here was the early signal on a downswing of the 9-day, and then here you can see the swing trade kicks into effect 3 days ago and is now looking to move higher. We think could go as high as $3.04. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.